And Larry, it's good to see you. Welcome.
Thank you, Kelly. Appreciate it.
Let me read the headline from the CDC. Man, Larry, they are going to be leading the news. They already are. Here's how Politico says it. Politico says, Larry, quote, "This sounds really, really bad." They quote the New York Times. "Americans should brace for the likelihood the coronavirus will spread to communities in the U.S." The CDC warned Tuesday. Dr. Nancy saying it's not so much a question of if this will happen, but a question of when. They're warning Americans for significant disruption to their daily lives, Larry.
Well, look, our public health people, who are spectacular, the best in the world, are preparing for any eventualities. And that's exactly what they should do. They were ahead of the curve on the travel bans. Now they're ahead of the curve insofar as laying out potential emergency plans. That doesn't mean it's going to go into effect, but they're doing exactly what we're doing. We're going to get a supplemental. We've asked for a supplemental up on the Hill of a couple of $1 billion or so. That's exactly what they were doing. I just want to say, though, as far as the U.S. is concerned, when you look at this, I mean, you had a little higher head count on the infections because of the cruise ship people coming off. We have contained this. I won't say airtight, but pretty close to airtight. We've done a good job in the United States. Hats off to our public health people. And the other generic point, and I hope we'll explore this, Kelly, is simply this. This is a human tragedy. There's no question, particularly in China. Human tragedy with, thousands of deaths. God look over them. Terrible. And that's the worst part of this. The business side and the economic side, I don't think it's going to be an economic tragedy at all. There'll be some stumbles. We're looking at numbers. It's a little iffy. We might have a clear picture in the next 2 to 3 weeks. But at the moment, Kelly, the numbers that we're looking at on all these Federal Reserve regional ISMs, today's consumer confidence number, there's no supply disruptions yet. It may be out there. I don't want to negate it. I'm just saying all I can do is look at the numbers.
Yeah,
and numbers are saying the U.S. is holding up nicely.
Right, and that's why I highlight the CDC today. I think this is a turning point. I think up until now, there was very little response in the U.S. other than people buying face masks and buying medicine. Now, after these headlines, Larry, this is going to change behavior rapidly. And here's my concern. People are going to look at these numbers in which the U.S. gets 74% of its acetaminophen from China, 95% of its ibuprofen, 80% plus of antibiotics from China. A construction worker neighbor of mine couldn't get a face mask this morning already. Now that these headlines are out there, all of those shortages are going to get worse, aren't they? And the economic impact is now going to start to grow.
Well, Kelly, I think you're making a lot of assumptions there, with all due respect. And we will see, with respect to supply chains and the availability of pharmaceuticals and other forms of equipment. I know there are issues there, and I accept that. I think we can deal with those issues at a later time when the emergency passes, as it will. But I'm not at all convinced that we can't get hold of what we need here in the U.S. We have stockpiles. We also have the capacity to produce more in all these areas. I'm no expert in this, but we've seen some of these biotech companies, Gilead being one of them, probably coming up with a vaccine in a much shorter time than people realize. Look, I don't want to sound heartless or cruel or anything. This is a human tragedy. It's mostly centered in China. There is contagion elsewhere, Italy, Iran. I think that's what's upset the market. So I understand that.
Right.
I would say, number one, the head of the World Health Organization today said, let us not overreact. I think that's an important point. I will make the same point on the economy. That's all I'm capable of doing, Kelly, and I may not be right here. But I will say this. Based on the numbers we know, GDP, Atlanta Fed GDP now is 2.6% for Q1. That could change, but that's what we know through February 19th. All these regional Federal Reserve ISM reports, they're not hearing chatter about the virus, and there is no evidence yet
right.
of any supply disruptions.
Well,
that could change.
Yeah,
I appreciate that.
I think
but I can only go on the facts that what I know.
And
That's all I can do.
I think you and I would agree Goldman's pretty good as an arbiter of this stuff. I mean, I think, they've kind of taken home the blue ribbon the last couple of years on their GDP. They've actually been more optimistic than most on the U.S. economy. They're at about a 1% reading for the first quarter. Again, it's not a disaster. It's not 3%. Again, we understand that. That goal remains, out there. But as the CDC starts talking about, and this is literally a direct quote from Dr. Nancy this morning, she says, ask children's schools and daycares about plans for closures or teleschool. Explore possibilities to work remotely. Options for telemedicine. I mean, this is going to change. This is going to have an economic impact. There's only a month left of the first quarter. Now this could go into the second quarter, Larry.
Well, look, those are appropriate planning measures by the best public health system on the planet. Absolutely appropriate. Whether they are put into effect, whether they become necessary here, remains to be seen. Again, I'll make the point. What we know now, as of today, this is very tightly contained in the U.S. Elsewhere, it's a human disaster, as I said before. But right here, we're doing awfully well so far. But I don't mind that our public health people, who are very knowledgeable with vast experience, they are a model for the rest of the world. This is what they should be doing. This is exactly the planning. We did this. We were ahead of the curve on banning flights and so forth, and we will try to remain ahead of the curve to protect American citizens. It's exact, but that does not mean that all this will come to pass. And again, I was just interested in the World Health Organization head who said, let's not overreact to that. I would make the same point on the economic side. The human tragedy side, difficult, horrible. The economic side, there is no tragedy in the United States. China is going to take an awfully big hit. Now, I was interested, too, I'm sure you know this, the IMF came out today, Kristalina came out today and said, yeah, they're going to get slammed in the first quarter, but it could be a V-shaped recession. So look, what I'm saying is, I, in the spirit of trying to stay calm here, take a look at the facts at our hand, see if they work or not.
Yeah.
The next few weeks will be very important. I just think people should be as calm as possible in assessing this. And emergency plans, Kelly, don't necessarily mean
I understand.
they will
I'm just
have
saying
to be
that,
put into
and
place.
you know how the media business works. If the CDC says it today, it's all anyone's going to be talking about tomorrow. So if they're trying to keep people from overreacting, I'm telling you they are now going to contribute to a larger reaction. But let me just ask you about this, because I really, really like your, your take on this.
When I was on your side of the street, I looked for the same thing.
Right.
I understand perfectly well. But I'm just saying, again,
But Larry, let me ask you about something very real.
Are very important and very wise.
You're right, contingency plans.
I'm sorry.
But here's the real activity that we have to think about. So you have Japan's economy shrink at a 6% rate because of an ill-advised sales tax increase. China's economy is now effectively a zero for the first quarter, could be worse. Germany looks pretty bad out there. These are the biggest economies on the globe. Can the U.S. avoid a recession if there's a global one?
Yes, we can. By the way, your German news is accurate, but that was true before this virus hit.
Yeah.
In fact, and let me make this point, my disappointment, and I've said this to you and others before, one of the headwinds we faced in the last several years is essentially a recession in Europe, and indeed the whole G7. And you're quite right about the Japanese sales tax, which I think was ill-advised. I tried to talk Prime Minister Abe out of it, but I couldn't. Shouldn't have done it. They're not growing. But they have been not growing for several years before the virus. Now, I'll make a plug. The G7 meeting is coming to the United States. It'll be at Camp David in mid-June. It just so happens that yours truly is going to be the Sherpa, and we are going to devote both days, Kelly. We're going back to the old-time religion, such as Reagan and Williamsburg in 1983. We're going to have 2 days of plenary sessions with the leaders of the Western Alliance and the leading democracies in the world, Kelly, and we are going to talk about, guess what? Where's the growth?
Well,
Where's the tax cuts?
I just hope everybody
the
comes
deregulation?
and they're not still
Where's
concerned about
the currency
coronavirus.
stability?
Absolutely, absolutely. Larry, let me ask you, this is a major, major headline for your lifetime, okay? In this moment, as you stand here, the 10-year yield has never, ever traded lower. It just hit 1.317%. Please tell us what to think about that, how the Federal Reserve, I mean, you have people on the street whispering about how we might get now a half-point emergency rate cut. Is that warranted? Would that even help?
Well, on the rate cuts, I'm not hearing that either publicly or privately. We're in touch with the Fed people all the time. You know, apart from the virus, Kelly, I have said I wouldn't mind seeing my friends at the Fed be a little bolder in their target rate and their balance sheet. I said that before the virus. That's not related to the virus. I don't expect the Fed. I'm not hearing the Fed's going to make any panic moves. Look, the markets obviously are reflecting a lot of new fears. No question about it. There's a lot of volatility out there. I don't think these are fundamental factors, Kelly. I do not think these are fundamental factors. Now, I believe, number one, the U.S. economy is in very good shape. And I think the recent data support that. Jobs, incomes, housing. I think I just saw a big housing number that you put on the screen before I came on. That's really good stuff. Number two, we have contained this virus very well here in the U.S., and all the emergency planning will add to that. Number three, the virus story is not going to last forever. It's not going to last forever. And that's why I like the World Health Organization saying, let's not overreact. To me, if you're an investor out there and you have a long-term point of view, I would suggest very seriously taking a look at a market, a stock market, that is a lot cheaper than it was a week or two ago.
It's cheaper than it was.
If you're a long-term investor.
Larry, it's cheaper than it was about 10 minutes ago. We're down 600 points again here. That's a 5% drop in just the last two sessions.
And I have not only do I have no power over that, I have no control whatsoever, and it's going to do what it's going to do until this thing plays out. But I want to make those points again. You've got a fundamentally strong economy. We've done well containing this in the U.S. The virus thing will pass. And if you're a long-term investor, I think they should look seriously at coming back into buying the market, the stock market, for the long run, where the great performance has been. This different, we're talking stocks here. That does not negate the human tragedy, which troubles me enormously and should trouble everybody
Larry,
enormously. But if we're going to talk financial markets, let's talk financial markets. I say this thing will run its course, is what I'm suggesting, and the U.S. is in excellent shape, and I wish our G7 allies would borrow some of President Trump's supply-side incentive policies on lower taxes and regulations and getting trade barriers down and energy independence. I wish they'd borrow from our playbook because we've been growing and they haven't. And that's the fundamental longer-run issue here, long after the virus passes.
So one final thing on that front, Larry, which is that the borrowing levels in this country are still very, very high. Disappointingly high. Look, it costs nothing to service the debt right now, which just makes people worry more about what happens when it is more expensive to service that debt load. So, you look at how cheap things are. You look at the deficits that we're running, in part to kind of make some of these reforms happen. How does this all, the timing matters in one sense, which is that the president's up for re-election in the fall, and it looks like he might be running against Bernie Sanders or possibly a moderate. But right now, Mr. Sanders has a lot of momentum. What's the message? How can you kind of get out there and say, are you worried about the timing in terms of the hit to the economy if this now drags into the second quarter, all this coronavirus stuff? Are you looking at maybe a 1 or 2% economy right in the middle of that campaign when the president has been saying, look, what sets me apart from the other party here and from other countries around the globe is higher growth?
Well, look, those are hard questions to answer. Let me just say, you mentioned borrowing costs. The Treasury Department is refinancing, and they're lengthening maturities. That's exactly the right thing to do. Like any home buyer with a mortgage, if you got low rates, take advantage of it. I don't see any. We're running 5% of GDP deficits right now, kind of Reagan-era deficits. I don't think that interferes with growth whatsoever. What will the impact be in the second half of the year? Don't forget, Kelly, we've had two big trade deals, and China in recent weeks, and you just saw an announcement from USTR today, China in recent weeks, I think unexpectedly, has been cutting tariffs and increasing exclusions for a number of consumer goods and other things that they need. That's a plus. That deal is going to go through. And that means that plus the USMCA deal with Canada and Mexico, you could be looking at a second half export boom in the United States, which will boost economic growth substantially as a consequence of the president's tough trade policies to open markets and stop unfair practices. So that's a counter view.
Sure.
I don't know if it's going to be right, but I think we should consider that.
Yeah, Larry, you think
yes,
quickly,
I do.
Will China be able to make all the purchases it's promised now that its economy is cratered?
Look, well, it's cratered in the first quarter. We will see beyond that. Tough forecast to make. I thought the IMF had it about right when they said it's going to be a V-shaped recovery in China. But we'll see. I understand there's an awful lot of uncertainty. Regarding Senator Sanders, who was a frequent guest on an old TV show on your network that I happen to host.
I've heard of it, yes.
I think he's... you made your start there. I think he is a man to be respected. I think he has a lot of backbone. But I think his socialist policies will do enormous damage to this economy, with or without coronavirus. I'm staggered. The volume of tax increases across the board, come on. Investment, capital, corporations are going to raise middle-class taxes on payrolls. We know that. Turning the whole healthcare system into a socialist government-run system, ending fossil fuels, the so-called Green New Deal, universal payouts, whether you work or not, for all Americans. This stuff is so far to the left. It does amount to socialism. I believe, frankly, the American people will reject it. And one reason they're going to reject it is our unemployment rates are rock bottom across the board. You know that.
All right.
It's the bottom half, the bottom 10% have done. I mean, here, one of these President Trump's policies have done, guess what?
Yep.
Rapid growth. Hang on, let's make a point. Rapid growth, low unemployment, with less income inequality. Less income inequality. And I think the Democrats are in complete denial about that.
All right.
And when, as the facts are made, I don't think that Senator Sanders, who I respect, but I don't think he's going to beat President Trump. Frankly, that's just one Indian's view, but there you have it.
Well, Larry, you've given us so much of your time today. We really appreciate it. Please continue to keep us updated here. Don't forget your old friends here at CNBC, Larry. Thank you so much.